Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again on the gold market. So just in the weekend it was said that probably should be some pullback down from the resistance area. There was the very wide hitting the OP target of this ABCD pattern around the resistance, and we talked about the harmony here, saying that well, probably hardly we will see the drop like here so deep compared to these levels. Probably will be some smaller, but as you know, the announcement of this vaccine from the Pfizer has made a magnificent effect on the markets, especially on the gold, and you can see the collapse was significantly stronger, although it corresponds to the idea of the pullback, but the scale of this drop was of course amazing. So why this reaction has happened? There's some few moments. First of all, it's of course the recovery. So on the strong news on the recovery, of course, that the demand for safe haven assets should decrease. But this is not the only reason. Another reason is that it changed the value of the United States dollar in the longer term perspective. Because appearing of the treatment from the Pfizer, it means that the United States will get the advantage in recovery using the vaccine, and it could make the recovery process faster and shorter in the term of the recovery, and this gives an advantage for the United States compared, for example, to the European Union economy. Despite that currently they're a step ahead with the lockdown that should be finished somewhere in the beginning of December, while the United States there are no lockdowns at all, and it's Biden should start to decide the problem on the coronavirus spreading someday in the future. But this recent news has made significant impact on the markets, and currently, well, it could happen that we will have to recover our scenario with the deep retracement. As you know, we have the strong support there around 1750, around 70 even area on the monthly chart. And technical tools shows that this pullback to the 17 is nothing really curious with that, because market hits the major COP on the monthly chart, and minor pullback to the 30% support is absolutely normal from the technical point of view. This is not the breaking of the bullish trend, something of that sort. But in the current situation, this action could become, this scenario becomes more probable. At least it gets more value compared to other scenarios as well. So to cancel this possible scenario with the dropping below this area, market will have to climb back to some acceleration and erase this sell-off. In this case, we could say yes, indeed, market's climbing higher and probably will continue back to the previous time. But currently, we should keep an eye on how retracement stands on the lower time frames, and of course currently the vital point is the lows around 1850. This is a point lows. Once market will break it, we probably will get some acceleration to the downside. So for the bears, that could be interesting point. The one thing that makes overall situation a bit tricky, that existence of the daily reversal that stands right below the A point, but with a few sessions maybe market will get the more space for downward action. And here's using potentially stop sell orders below the A or right around the A point, for example right at the C point, could give you the position on the moment of the breakout if market accelerates lower. With the upward action, guys, well, we have currently no new ABCD pattern, just because the C low stands above the A. Previous C point here has been erased, and that's why here I show you there's another ABCD, but well, that's mostly theoretical picture. Suggests that OP stands right here, back at the B top, 1966. The market will have to erase all this area. The one thing that we could extract from this ABCD pattern may be existence of the COP that could point on some retracement target. That will be approximately around 1920 area. That could suggest retracement will be over somewhere at this level, and then market could start dropping again. But it seems that pullback here could be even smaller, so take a look at the 4-hour time frame chart. We have 19 even area, that's 618.1921, where COP stands at still level to keep an eye on the possible downward reversal. If market will break both of them and start climbing higher, it means that this sell-off will be erased probably, which currently seems not very probable scenario. Scenario has less odds to happen compared to the downward continuation. That's also long-term trend line. This provides more resistance here, although it has been tested and broken already. Once again, it could become an additional resistance level that agrees with the 19 even approximately. Also could keep an eye on this level. And of course, as usual on the hourly chart, keep watching some patches. Maybe some kind of the ABCD pattern will be formed that will show you where market could stop on upward action. Currently, as you can see, overall price action doesn't look very strong. Well, it's typical for retracement type of action, and that doesn't let us to suggest that market currently has to reverse this recent drop and just start rising again. Sentiment has got significant shot from this news from the Pfizer, and well, after the initial pullback, there's definitely some downward continuation will happen because momentum of the sell-off is very strong. And currently the major question is whether this continuation will become another leg to the downside, its extension, or it will be just deep retracement continuation by the momentum action, and then market will reverse up. So that's the thing that we have to consider currently. Well, at this point, currently at this moment, we think that it's well too risky to take the long position on the gold market.